So I hope everybody's having an awesome weekend. This is 50 pips rocking and rolling here on the 22nd of February 2015. Not making any trade calls or recommendations because you and only your response for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclaimers here on the website and or else, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So it's been a busy week. Let's see what we've got setting up this week. So keep in mind that, the comments I'll make will be bar any kind of possible tape bomb or something hitting the headlines on Greece or whatever, right? So that's always going to be hanging over our heads. And we have this famous or infamous letter that's going to be sent on Monday. So we'll have to see how the market reacts to that once they get some more clarity from this Greek letter. So clearly there's going to continue to be a lot of headline risk this week. Now the week starts with interesting. We got the IFO on Monday, so that's going to be key. Then on Tuesday we've got Draghi speaking, and we also have the Yellen test that starts to testify, right? So that's the big event risk for the week. But keep in mind that also Tuesday, so we've got Draghi speaking, we've got Yellen speaking, we also have the Bank of Canada governor speaking, right? So we got three central banks on the wires. And then basically on Wednesday, we've got Yellen's continuing to speak. We got the PMIs out of China, and we've got Draghi speaking again, right? We've also got trade balance out of New Zealand. And then, we keep on having some other important data out of the UK. On Thursday, we've got, the set estimate for the GDP. We got the LTRO data. We got core CPI out of CAD, unemployment claims out of the US, and German CPI at the end of the week. So clearly it's an interesting week, right? So the main things are going to be possible headline risks out of Greece. Number two, we've got a lot of central banks speaking, but pretty much the only thing anybody's really concerned about is Yellen going to give any more indication on rates, right? That's the big event risk for the week. And linked to the USD, of course, and stocks, but mainly USD now. That's the focus. And then we've also got all this slew of European data, which seems to be improving, right? So let's see how these things gel. So going through the charts quickly, what do we got? Well, if we're looking at the ES, we're ripping, pressing new highs. We kept on saying that we'd be tactically looking for opportunities to get short intraday for small scalps, and there have been a lot of interesting opportunities, but we kept on talking about this looking like if it fails big, and by fails big, we were talking about that healthy, decent correction. Even though we've had a correction, but we're talking about a bit of a bigger correction, maybe 10% correction or so. We said it feels like it needs to fail from higher levels. And right now, it's breaking outside. We had this kind of ping pong zone, which basically with resistance and support, and now we're breaking higher. So as long as this previous resistance that now is going to be acting as support holds, as we said, it looks like there's not an awful lot to the upside, especially depending on what Yellen decides to say, what comes out of Greece, for these 2150s next level, we're looking to the upside. But again, we're going to be tactically focused on any opportunities to play short interim or intraday, depending on what hits the headlines. But right now, this is looking fairly strong. And as long as this previous resistance that's holding a support, very pure, very technical move, very nice little long here, it looks like it's going to try and continue to rip higher. And that's very similar to basically what we have going on the NASDAQ, right? Where you see essentially we're breaking higher on this 4-hour. We have this previous resistance acting as support, and it's continuing to rip higher. And even on NASDAQ, levels to the upside, there's not an awful lot until the 4500s, right? So we'll have to see what happens, but clearly there's a bid tone going into the week. Now, gold, where does that leave us on gold? Well, gold, we saw it trying to base. We had a very nice reaction at the 50 back, basically, from the move from, oops, not what I wanted to do. Lows to highs, came right back, confluence of the 50 back and the 100 moving average on the daily. We got a nice little pop here, right? And then it just couldn't hold the momentum. It's come back down and it's trying to hold this 61.8, right? So as far as we're concerned here, we're not so much focused on the fib. We're focused on this pivotal zone, right, which is these 1198s, pretty much the 1200 zone, right? And this is going to be the bull bear line going into the week, right? Hold below, we'd expect it to continue to try and rotate back down and take a stab at the 1150s. Oops, not what I want to do. 1150s. And hold above. Also not what I wanted to do. Hold above, we'd expect it to try and move right back into those 1250. So this is the new bull bear line going into the week, and we'll have to see how it behaves here. Again, a lot of choppy action. Really depends, depends on what's happening on crude, what's happening, with all these central banks on the wires, on the ES. But right now, we're just trying to keep it as simple as possible. 1250 upside, 1200 mid, 1150 downside. Let's see how it moves inside that range, and if it could still try and construct some kind of a good bottoming process here. And what does that mean for crude? Well, basically for crude, we've been talking about this ping pong around basically these 55.60s, 53.60s into the 54s and then the 50s, right? So it's a complex action, and as we said, bottoming will tend to be a process, and we wouldn't be surprised to see it spend quite a bit of time here trying to find some kind of bottom. The way we're looking at it now is we're looking low range 50, mid 55, and high 60. So if we break down, just keep in mind that this is our base support that's been holding, and this is the base support. We need to get daily closes inside or above the 47.50, this base support, to continue to try and play this upside rotation and move all the way back to a more balanced point where we'd expect to be towards those 50s if we manage to, towards the 60s if we manage to break above the 55, which is pivotal level, right? So that's pretty much what we're looking at. And the other interesting thing is, again, we see very nice action on that gas, right? So basically, we keep on, we look at this every couple of years, maybe. We don't often look at this, but there's always seemed to be a point where it starts to tank hard and everybody starts going, oh, it's the end of the world, it's going to zero, right? And when we see a lot of players going, oh, when some kind of commodity is going to zero, especially nat gas, we like to take the opposite side of the trade, right? And it looks here, it's trying to got some basing process. We said those 1270s are looking very, very interesting, and to us, definitely the risk reward is clearly in favor of the long side, and we had this very nice bottoming process, and then when we start to hold with higher lows and then back above the 270s, basically, bam, we got that aggressive move higher. So we're looking to this to move back into the 380s, possibly if it gets some strong traction above the 3 mark, right? We'll have to be a bit patient, but again, clearly there's a lot of potential to start to move 340s and back to 380s if we can get some Momo, okay? So on the currency side, euro, what's happening on euro? Well, it's interesting, we got the IFO tomorrow, right? We talked about, we're stuck on euro. We talked about this whole area. Remember when we had, we did the session when we had the Greek elections, right? And on the final gap down on Sunday night on the Greek elections, we got, on the Monday when we had the IFO, we said, if we break below that, that's going to hold very, very heavy. If not, we expect that to be a bottom, and we expect to see it pop higher, right? We got a decent 400 pip move above that range, and it's still stuck there, right? So you can look at this on a number of different charts, but basically it's stuck. Even here on the daily, it looks like it's trying to bottom, but again, very, very choppy. It's a very big chop range all the way around here, from those 116s into those 111s, if you want to call it, with these 114s being the pivotal level in the middle. So we're still stuck looking for direction in the middle of the range. So in terms of the bigger picture, we still think there's a possibility of the squeeze back to the 116s or higher, and it's basing here in the middle of the range. From a short-term perspective, we also discussed this, and I explained the way we were trading this last Friday when we did that impromptu live session. And for everybody, so basically, we're keeping it extremely simple, right? We've got this bull bear zone in the middle, and the way we look at it is very easy, right? As long as it keeps on coming back down from above, we're getting long tight stops below for to get to cover some on pops and then try and get it back into the high of the range, you know. And at the end of the week, we got a very nice opportunity, you know, very nice risk reward on these moves. You know, these are pretty much 30 pip stops. You know, we're popping about 120, 130 pips on those moves. So again, is it choppy? Sure, you know, but it's stuck in a range, and as long as it's in a range, it's just a range play. Now you have to keep in mind there's a bigger picture and there are bigger levels at work, but for now, it's still a range trade. But we still think there's a lot more risk to the upside than the downside. So we'll have to see how that plays out. In terms of cable, what's going on cable? Again, this is our, if you want to call it, our strongest conviction move. You know, we're talking about this move when we were in the 150. So basically looking for that 150 to 148 support to hold for a move back into the 160s. And you know, at least into the 55, 56s and back into the 160s, which is basically the middle of the range, just looking as a big range play on the weekly. Cyclical bottom for a move back down in mid-range, those two moving averages. And that's completely in play, right? And even if you look at it from, you know, the 4-hour chart, which we've been posting on the blog, you see that it's been holding previous support and resistance, previous resistance becoming support. It's been a bit choppy because we've had data, etc. But, you know, so far it's still holding this rotation higher, and it's trying to, you know, it's still in play. We'll have to see how this trade's going into the week, right? If early in the week we hold back below these 153.50s, you know, we might see some downside Momo coming in, but as long as we hold above here, you know, we'd expect this to continue to try to rotate higher, right? So it's still completely in play. I think I posted this because a lot of people like to look at the moving averages, you know, and if you look at it in terms of the moving averages here on the daily, you've got a 50, a 100, and a 200, and what's happening, you see we've moved back above, you know, previous resistance, trying to smack it down. We've moved back above previous resistance, acting as support, and this whole zone all the way into this 53s. That's why I was talking about in terms of a cyclical perspective on Friday. We said as long as we don't trade back below 53s, this is still holding very nicely. You know, this is the big base, and this is still going to try potentially to hit these higher levels, right? So rotations are in play. It's fairly decent moves, very nice moves. Yen, what's going on yen? Not a lot. You know, it's still stuck in this big broader range. We said, if anything, when we did that live update on Friday, we've been scalping any moves back down towards the mid-range for pops into 118.50s, 119s, you know, back into that level. That's still in play. It's very choppy. It's a broader range, but it looks like it's trying to coil potentially for pop higher, but it's very tricky to call in the middle of the range. You know, AUD, NZD, a lot of people getting short in the hole. As we always say, we don't like to get short into support or long into resistance. So it looks like it's trying to base here. More importantly, the action on Aussie is really nice, right? You look at the monthly, it's still very early, but you see it's got a positive little candle there. And what we discussed on Aussie was basically the whole fact that you should not underestimate these kind of moves, right? So I'm not going to talk about the whole thing again. You can look at the recording from last week on the Fridays we posted, but this was the tell for us, right? This is for the tell, and we said, you know, this is a very, very important dynamic that happens, so we'd expect this to try and form a base and move back up into the 80s at least, right? So right here, it's holding, and you see we've got some funky action, but it still looks like it's holding this here, and it's pressing right here. So we'll have to see how we trade early on in the week, right? And what are we looking for? You see these highs right here where sellers have been trying to support it, so to offer it, right, and keep it below this kind of choppy range here. So as long as the sellers manage to hold it below the 78.50s, you know, expect it to be very choppy inside this range, you know, but we start to break above the 78.50s, then we'd expect it to potentially gain as it starts to squeeze a lot more shorts out of these trades, get a lot more traction to move higher and finally get that move back into the 80s, right? So that's in play, and that's a very similar move that we've been seeing on Kiwi also, right? What we talked about was the fact that here it's just chopping around towards the end of the week, but we discussed this low and we kept on saying 76 is a track, 76 is a track, 76 is a track. So short term, this is really the bull bear line here. We'll have to see how that 76 remains the bull bear line. But if you remember, the chart we've been posting a lot on the blog is this monthly, right? And we talked about the fact that, you know, we don't get short into strong support, and as long as it held back above 73.60s, we were bullish. We're very aggressively looking for this to come back into the 76s. Now you can see on this monthly why that 76 is so important, because that's that 100 monthly moving average now, right? So that's going to be a massive zone. So the edge was really at those lows to get long, and now we'll probably see a lot of people trying to get short into the 76s. So I think it's going to be a very interesting level, and I think there's going to be a lot of different trading opportunities both on the long side and the short side around this zone. So I'm going to be looking at this very, very closely. But the way this is shifting, basically above 76s, then we would expect this to try and make an aggressive move back into the 80s too, right? If we get daily closes above that level, right? And if it can't hold, if it starts to get smacked down, then we could see the 73s come. But clearly there's a lot more risk to the upside than the downside if it gets some traction, because there's a choppy broader support zone, right? So we'll have to see how that trades. And that's pretty much, I mean, CAD's, a lot of people asking about CAD. You know, we had this chart here and we said, you know, there's a lot of bull bear, there's two huge zones, right? Two huge support and resistance zone here, and it's a bit stuck. To us, basically, it looks like no matter what's going on, no matter what kind of fat fingers everybody's talking about, it still looks to us like it's trying to put in a top. It looks like it's having trouble finding new buyers at highs, and it looks like the only time it's really rallying is, you know, if you get some kind of comment on the wires, if you get something on crude. But apart from that, it looks like it's struggling. So right here, it's in a broader chop zone, if you want, similar to that yen area. But, you know, and looking at this descending trend line as the bull bear line. But, you know, if it breaks back below this shaded area, then we'd expect this to have a lot of room to the downside. But right here, it's still chopping. Clearly, this descending trend line is going to be very, very key for Momo and flows inside this broader chop zone, okay? So that's pretty much what we're looking at going into the week. Again, keep in mind that there's a lot of chop, there's a lot of headline risk. So what we always say is, you know, don't get confused by velocity of move inside range. And what that means is, if you look back at the charts we just discussed, so like maybe that euro inside that, you know, the 111, 116 that we're stuck at this 114, or basically that a yen that is stuck in the shaded blue area, or this CAD that's stuck in the shaded blue zone with a descending trend line or an ascending trend line in the middle. It doesn't matter. We're stuck in these broader chop zones. So what it means is that in an illiquid market, in a nervous market, less participants in there, and with a lot of headline risk, basically it's very easy for any kind of order or anybody to move the market, but it's very easy to move it inside these broader zones, because you're probably going to get a lot of the interest, or the bigger size is going to be waiting at extremes. So what that means is it's just a wider range, but don't be fooled trying to chase quick moves on headlines, because basically it's still chop. What's likely going to happen is you're going to get some headline, then the headline is going to be, they're going to say something, sources say this, or we think this, and then after 2 seconds, well, actually it's not. You're going to get a headline that's going to contradict, and what you're going to get is a lot of choppy action. So this is not the kind of market to try and position yourself necessarily for very big moves, or at least with tight stops, because the bigger players have already made their bed, right? Most of the bigger players, or the people looking to make bigger swings, are already long or short, right? And they're not going to be trying to micromanage inside the range. So just don't get chopped up inside the ranges, right? Keep that in mind. Let things settle, wait for official things to come out, and don't go chasing, right? Don't go chasing the market. It's really important to stick to your levels, stick to your setups, and just try not to chase, okay? I wish you guys an awesome end of the weekend, wherever you may be, an awesome Sunday. Maybe it's already turning on Monday for you guys. Anyway, great start to the week. I'll see you guys bright and early for London start. Have an awesome one. Thanks for listening as always. Have an awesome one. Thanks. Bye-bye.